Hey, what's up YouTube? This is Leo with DRIPCalc, and I want to make a quick video about ZIM integrated shipping, their upcoming earnings report, and my EPS estimate as well as dividend estimate. And just a quick caution, guys, this video is not a financial advice, and I am not a financial advisor. If you want to invest in any securities, you should consult a professional, and I'm making this video as for informational purposes only. And also, I want to talk about some conversations that I've had with people more knowledgeable about freight shipping, and also let you in on their estimate. So basically, somewhere around October 1st, the estimates for ZIM have appeared on the page, on the ZIM's page on Robinhood. And so on the first time I saw that, they estimated $4.54, so $4.54 EPS. And then next day they actually upgraded it to $5.78. And so I followed this guy, Chris Shipping. He is really knowledgeable about this stuff, so you should probably follow him also if you are into shipping stocks or just want to understand shipping costs across the ocean, etc. And so basically, I pointed that out, and people have been commenting that the estimates from the street are way low, and people are saying that it's going to be in a range of $8, $9, even as high as $11. So here's another estimate. I actually also commented on Chris's post when ZIM actually ran up to like almost $26. Today it's trading at, I think, 28, not 28, like $22. So it actually has gone down. In the last few days it went down as low as like 18 bucks. And but we're not here talking about the price action, but basically people are saying, you can see right here, people are saying close to $10 EPS, and so that's great. Today I posted another, like, I actually commented on Chris's post about the ZIM price going up about 7% on a day and staying stable. And so I asked him about his EPS prediction. He's saying $7 to $10 without, doing deep dive, and he's going with $9.50. All right, and then here's a very interesting comment. So, and I actually do not take this into account of my calculation, but basically what he says is that $3.50 of EPS is not from the Taiwan revenue is not included in the estimate, and so he's saying consensus about $6, and therefore plus $3.50 from the Taiwanese revenue, so $9.50. That's how he comes up with it. So let's take a look at my numbers. Okay, so here's a more or less detailed breakdown, and here's how I base it on. So first of all, let's look at the Q2 report from ZIM themselves, and they're saying their volume is expected to be unchanged. Okay, so that is an interesting thing. And so in my estimate, this line right here, TEU volume, I left it for my low estimate. I left it the same as it was last quarter, so 952 million TEUs, which stands for a 20-foot container equivalent. Okay, and then for my middle or more realistic estimate, I use 990 million TEUs, and then for high-end estimate, I use 1020 TEUs. Now, what's more important is the TEU rate. Okay, so if we go back to, this is a first quarter of 2022, you can see that TEU rate, let's look at TEU right here, the rate was almost $4,000 that they captured. Okay, but right now what happens, if you read the Q1 report, basically they were locked into the rates, the contracted rates coming back from 2023 before the whole Suez Canal crisis started. Now, I'm not going to dive deep into that. I already covered that in my previous previous quarter estimate. But basically, you can, if we look at shipping volumes, where is that thing right here? So you can see that in 2023, their shipping volume through Suez was pretty large. It was larger than their Atlantic shipping volume. But now Atlantic is about 50% higher. I'm surprised they still are going through Suez Canal in quarter 2 of 24, because like of the Houthis, trying to sink down pretty much any ship. I mean, they say their goal is to sink Israeli ships, but they're going after all the ships, even like their friendly Russian ships. They're sinking them, the Russian oil tanker. But Israeli ships are the primary target of the Houthis, so I am surprised they're still going through the Suez. Hopefully they stop that completely, and we'll see a zero on this bar in when they report earnings for Q3. Okay, but basically we'll go back here. So this for TEU rates, like I said, they still have a lot of those contracted back from 2023, and usually I think they sign contracts 1 year in advance, as much as 1 year in advance, and so that's why I'm giving them a pretty discounted TEU rate. So last quarter their average TEU rate was $1,674, and if we look at Q1, the actual rate was $1,452. So from Q1 to Q2 it went up by $200, or about 15%. So this quarter I'm estimating low end about $1,790, so that's only $15 improvement. Mid range I estimate almost $2,000, and high end, oh, let's call it $2,190, because again they're still stuck with those contracted rates. If we look once again into Q2 report of this is third quarter of 2022, so that's when TEU rates were really high. So rate was like 3,300. First quarter of that year, TEU rate was, let's look for TEU rate right here, almost $4,000 per container. That's pretty amazing. I'm not sure we can capture that high of a rate this quarter, and if we do, I mean, guys, that would be amazing. That would be insane. So anyway, with all of that said, here I have, this is a pretty simple estimation, and basically I go off revenue minus expenses. And so last quarter their expenses were, basically we take revenue minus net income, and that's how we get $1.56 billion in costs and expenses. And so that's how we get our EPS estimate right here. So my low end estimate, unlikely, $4.03, middle of the road $6.49, and on the higher end I'm calling for about $9.30. Okay, and how I come up with these estimates right here, so basically the DREWRY shipping index, okay, and we can look at it right over here. Let me zoom it in so you can see better. These are the actual rates. This is an index, so it includes different routes like cross Atlantic, cross Pacific, across Asia. So there's like all these routes right here: Shanghai to Rotterdam, Shanghai to Los Angeles, Genoa in Italy, and Shanghai to New York. They have been steadily going down, but if you look over here, so this is where Q2 ended, just about here at $5,400. Okay, so they jumped by a lot, but basically this is where the quarter ended, the previous quarter, Q2, and Q3 began. And so most of quarter 3 we've been in this patch between $54 and almost $6,000, and so up until end of August. And so all of September we've been going down steadily. And so I estimate that on average during Q3 for ZIM, the average price for a container, but we're talking about a 40-foot container here, so that was $4,600. Okay, and because of the contracted rates, and ZIM is using actually 20-foot container equivalents, so we have a lower price per, or TEU rates over here, freight rate. Okay, so now let's talk about dividends. I'm pretty set on my EPS estimates. Again, I don't really know a lot about Taiwanese volume that Chris is referring to right here. So plus 350 for the Taiwanese revenue. I'm not sure where that's going, from Taiwan to US or Taiwan to China or across the Pacific somewhere. I don't know, so I can't comment on that. So I'm not including that in my revenue estimate. But if they add the 350 per share EPS, that would be amazing for everybody if you're a shareholder. Okay, now as far as dividends, so here's based on this EPS numbers. Here's the dividend, and the policy of ZIM is to pay 30% of net income as dividend, and so per share that comes out to $1.95 at our middle of the road estimate. But also what Israeli government does is they take, I believe, 25%. That's what they did a couple years ago. This year I haven't figured it out, but it's close to 25%. So after Israeli dividend tax, you will receive about $1.46 per share. But also the ZIM's policy is to pay out 50%, but what they do is they pay you 30% this quarter, and then they pay a makeup dividend in quarter 4 of this year. So that would be around March time. And so here I did a calculation for accrued dividends, makeup dividends. Okay, so this here is a makeup dividend total amount for Q1. No, C9. No, my bad, this is incorrect. Okay, I'm confusing myself here. So this we actually have to move over here. So this makeup dividend, that's actually for current quarter, and this 81 cents, that belongs to my low end estimate. $1.30 is a 20% of this 649 EPS, and that's right over here. And $1.86, that's on the high end. That's a 20% makeup dividend that will be added to quarter 4 payout for ZIM shareholders. So if you will hold through the quarter 4, then you will receive this dividend. Now you have to hold through the ex-dividend date, but that's a whole different story. This is just an estimate for current quarter, and then after tax it comes out to 60 cents on low end, 97 cents in the mid-range, and $1.40 for the high end. And so here are the actual numbers of accrued dividends since quarter 1 of this year. Okay, so we have 15 cents from quarter 1, combined Q2 and Q1, that's 77 cents, and including mid-level estimate for this quarter. No, actually I'm wrong. Here we have, yeah, that's correct. So middle of the road estimate for this quarter, we will have about $2.06 accrued dividend that will be paid out as a makeup dividend in quarter 4. Okay, and after taxes, 11 cents for quarter 1 will be paid. Combined quarter 1 and 2 will be 57, and combined quarter 1, 2, and 3 will be $1.55. Okay, so that's for those who are planning to hold on to the stock. Now I've been holding to ZIM shares for some time, so and I don't plan to sell at this point, so I will most likely be getting this. But what we're more concerned about right now are these numbers right here for quarter 3. So yeah, $1.95 estimated dividend after tax will come out to about $1.46. Now, if what Chris is saying is correct, and we'll actually get around $9.50 EPS, you are expected to receive $2.79 dividend and $2.10 after tax. Okay, guys, so I've added some yields over here based on the current ZIM price, which is 21.18. Now the market is closed, but anyway, so on the low end, if we receive $1.29 dividends, and that's before the tax from Israeli government, so that's almost 23%, middle of the road almost 37%, and high end almost 53%, and after tax it's like 17%, 27.5%, and almost 40% yield based on these estimates and the current price. Now the question is, should you be buying ZIM? And this is not a financial advice, guys, because ZIM is a very volatile stock, and let's take a look at it. So here we have it, and you can see since IPO it actually has great returns. But if we look at price action for the stock, so I actually had to log in to be able to show you advanced reports. Basically you can see it's been very volatile. It went as high as almost $90 in March 2022, and they paid an amazing dividend over there, like $17 right here. That's what they actually paid, guys. This included the makeup dividend, but that was the actual dividend payment, less the tax from the Israeli government. But that's, if you live in Israel, that's a whole different story. If you live in the US, they just withhold it. But you can see it dropped to like over here below $7 in November, end of November of 23, and that was when the whole war in Israel began, and the Houthis started attacking the ships going through Suez Canal, going through the Red Sea. And so it bottomed out over here, although the war began over here on October 10. It kept going down. In a retrospect, that was a great time to buy, but the shipping rates were still very low, and they were still locked into all those contracts. So they recovered tremendously since then. You know, if you look over here at 1 year chart, they went from about $7 to 21. That's a 3x return since then. So in a year, it's almost 220% return, give or take. Since the low point, it's like 300% return, 3x return, or 200% on top of that price. But anyway, so why I'm saying it's a volatile stock, and why I'm saying it's not financial advice, and you should, if you consider buying the stock, you should understand the downside. So basically, the 2022 year was very profitable for this company. They paid amazing dividends, blah blah blah. It was like supply chain issues, and the container rates went as high as $10,000 per container. Some even went higher. But then 2022 came to an end. They paid their makeup dividend, and whatever they earned in Q4 of 2022, over here they paid it in April, so $6.40. And then from April of 2023 until June of 2024, basically for 5 quarters they have not paid dividends because they were losing money, and only in June, in the second quarter of this year, they started paying dividend again. So after 5 quarters of radio silence, and you can see they had like a pretty massive losses over here, and now they're profitable again, which is good for shareholders, but it could go in a negative again. So what they're doing now is basically they're trying to do a mix of more spot rates, and I hope that will help them in Q2, in Q3 of this year. But I think that eventually that Red Sea crisis will be resolved, and when that happens, the shipping rates will go down again. Shipping companies will start going through Suez Canal again, and I'll show you why this is important. All right, so here's the map of Europe, Africa, and Asia. And basically, most of the shipping happens from China, from right over here, Shanghai, Shenzhen, from all these ports. And if they're going to the west coast of the United States, they just go straight across the Pacific. But if they're going to Europe and the east coast of the US, all those ships, they go this way. Okay, so usually they go the shortest route over here through this Gulf of Aden, and this straight right over here. It's only 30 kilometers, like 20 miles wide over here, and the Houthis are attacking all the ships over here. And so all the shipping to Europe basically now has to go around Africa. That adds about 10 days to the shipping time. It adds about 1 million barrels of fuel, of oil per day to the global oil consumption, because all the shipping to Europe and east coast of the United States adds a lot of delays and extra fuel consumption, because now the ships have to go this way around South Africa and right over here to the east coast of the US. And now we have the strike on the east coast of the United States, so that's not helping. Whatever. But so basically, look how short this distance was to Genoa right over here in Italy, and you basically like double that distance if you go around Africa. And so so when that is resolved, I believe shipping rates will go down again. And if we look at the DREWRY index, you can see how low it was over here, just like $1,400, and ZIM in the quarters of, so let's look over here, 23. Let's look at Q3 of 2023 before the war. The rate per TEU was, we'll find it right here, 1,000 and basically $1,139. That's how low the shipping rates were, and based on those low shipping rates, they were losing money because their revenues suffered, and over here they had a big net loss. And I believe that's because they like took ownership of a lot of new boats, a lot of new ships, and those run on LNG. So the good thing is that ZIM is actually transitioning from diesel fuel to LNG. Now I'm not sure about the logistics of fueling those container ships, but LNG, or natural gas at least right now, is super cheap. It's like at 20-year lows in nominal terms. So if you include inflation, it's like it's like super cheap compared to where it was 20 years ago. It's like maybe half the price. If we say over 20 years we had like 50%, 60% inflation, it's very cheap right now. LNG is more expensive because it has to be compressed and then delivered to wherever it's being used. But I'm not going into logistics of fueling ZIM's ships, but they're actively transitioning into LNG tankers. So where did they talk about it? Let's search for LNG right here. So 46 new build vessels, 28 of them are powered by liquefied natural gas, and they're taking deliveries. Like, it improves their cost structure, but over here they had a massive net loss, and that their cash position suffered tremendously during 2023. It was just like the supply chains normalized and the shipping rates were low, and so they weren't doing well. And so you can see EBITDA loss, net income loss, very low free cash flow, and free cash flow per share was pretty low. Gross profit suffered, expenses were huge over here, and yeah, so 2023 wasn't a great year for ZIM. And once the Red Sea crisis gets resolved, I am afraid that ZIM price will go down again, because their profitability will suffer, as well as all the other shipping companies around the world. But so far, there is a crisis, there is possible war with Iran, and so the shipping index is staying high. But it's been declining, guys. It was almost $6,000 over here in the middle of July, and then like yen carry trade happened right over here, and they already started to go down. There's every other day there's a talk about peace, but that never happens. But it's been collapsing, so I don't know, maybe it will flatten out, reverse course. We don't know what's going to happen. Hopefully the war ends as soon as possible. But as far as investing in ZIM, you should understand that when the shipping rates go down, their profitability suffers. Despite that, this quarter should be pretty good. Again, if we look over here, here's the earnings per share. They've had as high as like $15 per share EPS, and yeah, one of the dividend payments was literally 17 bucks. It was insane. Over here they paid $6.40. It was a very high yield. I don't think even this yield is being calculated correctly, but whatever. It was very substantial dividend payments, but investing in this company, I'm not sure for long term. Anyway, guys, so that's my estimate for Q3, and I hope that we end up above my mid-range. And yeah, good luck to all the shareholders. And thanks for watching, guys. Subscribe to the channel, smash the like button if you enjoyed this video. Leave your comments or questions in the comment section below. I've been using this DRIPCalc Pro visual stock research tool, and so if you want to try this tool, we actually offer a 2-week free trial, completely free, and a 25% lifetime discount. So if you sign up today, you will get your price locked in with a 25% discount. When we raise the price, it will not affect you, and this discount will go away eventually. So don't waste your time. If you want to try it, go ahead and start your free trial. And we'll also have a stock compare tool over here, where you can actually compare different stocks side by side. And let's do a quick comparison between ZIM and say S&P 500. So SPY, now S&P 500 or SPY, it's an ETF, so we are not going to see any numbers as far as earnings per share and all that good stuff, revenue. So because it's an ETF, they don't actually have earnings per share. But you can see over here, since the IPO of ZIM, S&P 500 returned 63% total return with dividends reinvested, and ZIM has returned almost 400% since then. But again, their IPO was at like $11, I believe. Yeah, $11.50 right here. That was their IPO price, and with all the dividends they paid, like, look how much they paid in dividends. So if you spend $10,000 at IPO, you've received $46,000 in dividends. Now, will they pay that in the future? I don't know. Buying the stock today, you are, and holding it through Q4, you will be receiving this accrued dividend, and also including Q3, and then whatever happens in Q4. But again, guys, once the crisis in the Red Sea ends, right? Once the whatever the Houthis stop shooting at the ships going by, then the shipping rates will collapse. So yeah, if you plan to buy the stock, you have to keep that in mind. It's a very risky proposition, and you could be underwater on the stock for a long time. Anyway, thanks for watching, guys. I'll see you in the next video. Bye.